Hello and welcome to Big Deal. Now, valuations of the new age companies on their way to listing is the biggest talk of the town right now. Now, the house is divided between the yeas and the nays. Is this a new norm where the bottom line just doesn't matter, or will it eventually be the differentiator between the winners and the losers in this space? Let's cut the noise and get down to the basics on how to value these new internet commerce companies and how sustainable are the current valuations. Also, does aping the West work the same way in an Indian setup? Let's find out from two strategists and investors joining us on the show to give some sense from their research and insights. Let me welcome on the show Anurag Singh and Safir Anand. Safir, starting with you, of course, you've made many investments and you have a huge Twitter following on the kind of insights that you share on the startup IPO system. How do you view the current setup, what is happening in the startup IPO frenzy, and second, about the blockbuster listing that we just saw?
Well, thank you for having me over this afternoon. So what's happening is that we have a very good lot of companies that are coming for IPOs, but most of the advantage that exists in their valuation has already been creamed by the private equity players. And while some of these companies may eventually do well because of their business models and the way they are made, the real problem is that there's so much of an interest or so much of a FOMO effect at play that there is a virtual race to sort of acquire these shares irrespective of valuations. I think the very basis of investing is being ignored in many of these cases. And it is quite likely that over a period of time, the investors will either find stagnated returns, which means that they'll buy today but not make money and the returns will start tapering, or they will have diminishing returns over a period of time. It's a lot to do with the liquidity that is at play in these issues.
Right. So, Anurag, some of your research reports have been very widely read as well as appreciated. Let's begin with the first one on Policy Bazaar to be listed very soon. Their subscriptions have just closed. What do you have to say about a company like this and the kind of value perspective that it presents for the investors?
Yeah, so Nisha, first of all, thank you for having me. I would say Policy Bazaar, despite being a great company, I think I have like 3-4 big concerns where I would like to caution investors. One is that it is asking on 1,000 crore of revenue, it is asking a valuation of 45,000 crores. Now, just to put this in context, IndusInd Bank made about 5,000 crore from brokerage. Policy Bazaar, after all, is a brokerage firm. The bank itself is valued at $12 billion, right? On 5,000 brokerage revenue, which is just about 15-20% of its entire income. Policy Bazaar in that standings is just about like 1/20th of IndusInd Bank and is asking for a half of valuation of IndusInd Bank at about $6.2 billion. So I think that really doesn't sit well with kind of my calculations. Second point I observe is that it has a very stagnant revenues for the last 3 years. Be that as it may, people will blame it on COVID, but I think there were tailwinds for the digital business, which is not seen here in case of Policy Bazaar. Third point, I think let's look at, never mind the bullish projections by the consulting companies and investment bankers. I think people of late have been saying that insurance market is a big opportunity in India and all of that. And I think between 2021 and 2030 is supposed to grow at maybe next 18 to 20% CAGR. I think let's go back and rewind ourselves to 2011 when the very same consultants and investment bankers said that the market will grow at 30% CAGR. Surprisingly, it didn't grow by more than 4% annualized, per year. So in a very stagnant market, I don't see that, these numbers that are being projected by Policy Bazaar are kind of holding ground. Right. Finally, I think in terms of insurance, I think it's a very people-intensive business. If you look at 65% of the cost of Policy Bazaar also comes from employees' cost. Add to that about 40% promotional expenses. I don't find a path to profitability for Policy Bazaar. I think that's in a nutshell. I would say where I'm kind of hesitant. I'm kind of investing these kind of companies.
So Anurag, you gave a very detailed analysis of your viewpoints on Policy Bazaar. Let me ask Safir. Safir, one of the VC investors, very well known, shared with me that the only thing the person looks at while betting their money is the USP of the company. Is it solving for a particular issue which cannot be easily replicated? What do you have to say about this USP, and how have the US companies, who have been much more mature and advanced in their cycle for the startup IPOs and listing and have seen enough by now, how have they gone ahead with the USP?
Yeah, so the USP of a company in my language or parlance is called an intangible. And if you look at wealth creation studies all over the world, you will find that more than 90% of the wealth of the world is moved towards intangibles. Now, what was happening is intangibles were initially known things like a trademark or a patent, but in today's world, there are new forms of intangibles such as know-how, such as data, such as business methods, algorithms, and other things. So the real way of looking at the US companies is that they're looking at innovation, which is a very critical part of valuation, because innovation can be disruptive and it can also be an anti-fragile. You can sort of become anti-fragile, but they also are looking at layers of innovation within that ecosystem. So they don't stop at one intellectual property, as an example, a brand. They have a system, they have a process, they have a manpower training, and they have a whole layer of things. So the continuity or the longevity of the business is therefore well planned. And also because there are layers of intellectual property, the ability to disrupt these companies or destroy these companies starts getting impacted. So when they roll over from one product to another, for example, if Amazon decided to roll over from the internet to, say, a subscription model called Prime, the ability to use that database and to move one customer base into another customer base is very much in place. And therefore, the ability to predict earnings is much more stable or easier, as opposed to business models that are one-stop, and you really don't know if they're going to be destroyed or they will continue to innovate.
So, Safir, if I get the crux of your matter very clearly, besides USP, you're saying that the entire market will boil down to disruptor versus the disrupted, and that will define the winner versus the losers.
Yes, and particularly if the disruptor is able to have a longevity, because then even if the valuations are out of sync initially, they will catch up. But if the disruptor itself gets disrupted or is not able to linger on with its power of disruption, then the valuation will hit a wall, and eventually it will be like the greater fool theory, where the last buyer will have to pay the price for all the wrongs.
Right. Okay. Very well put there, Safir. And let me take off from where you left. We have seen this disruption game, especially in the case of the largest IPO this time, Anurag, for this year, for India ever, $20 billion kind of a valuation being demanded by Paytm in its IPO process. And we have seen how they've had the first mover advantage and it got disrupted by UPI. What is your overall sense on this particular company and the valuations?
Yeah. So Nisha, very well put. I think Paytm was the first one after demonetization that kind of disrupted the whole payment space. And I think it got credit for that. But I think since the advent of UPI, very few people have noticed, but users would know that Paytm itself got disrupted. So, in a market which is all about winner takes all, the internet economies, you find that just one or two players dominate the entire market, and there's hardly a space for any third player. Today, on a UPI platform payments, 80% of the space is taken by Google Pay and Phone Pay. And Paytm has just about 12% market share. I don't know, from that kind of a space, how do you bounce back in a winner-take-all economy? So that's a very solid point that goes against Paytm. Very interestingly, I think on Paytm, over the last 3 years, they made accumulated losses of about 8,300, just about 8,000 crore. Very interestingly, the fresh issuance of shares on the IPO is also 8,300 crore. So effectively, as I see, investors buying Paytm is just writing off the losses for the last 3 years that the company has accumulated so far. That's not how, I see investing, in that sense. In terms of valuation, I think there's another play, which is that, it's almost following like a playbook. Companies not looking at their business model and the market potential, the first number they look at is what is my sales and how do I multiply that by 40, 50 times and then arrive at a market cap.
Right.
Now that might be, you might take that from US, but that doesn't mean that you also can replicate the market potential.
All right. So Anurag, the US point, I will definitely chew more of your brain on. But one quick question before we end the segment on Paytm is that they say that payment gateway is their mainstay business, which will give them the immense traffic to really create that super app, and any one of the businesses really fructifying will give them the kind of valuation metrics that they're projecting right now. What do you have to say about that?
So Nisha, here is my take. I think I see Paytm, as a company which started off very well, but I think today, as you see, it's just a also-ran player, which is third and fourth, and hasn't barely scratched the surface in terms of other businesses that the super app is claiming to be it lending, be it insurance, be it brokering. In terms of the payments also, it is, we discussed that it itself got disrupted. I don't see any space where Paytm has a core competence and say, I'm the market leader. And if you are not a market leader and top one or two player in any space, as of today, I doubt whether people will be willing to pay the price you are asking for.
All right. So conversion as well as execution, there lies the real value going forward, and winner takes it all. We will continue this very, very interesting discussion on the other side. Don't forget, we have lots more to discuss. And also, is Zomato's stock price holding up is a real vindication of the startup IPO valuation that the companies are commanding. We'll discuss that and more when we return on Big Deal.
चलो आज भी जल्दी उठी,
हैबिट ना।
लेकिन इतनी सुबह उठना तुम्हें कहाँ पसंद था?
पर इम्पोर्टेंट था ना, कबीर के लिए।
ये व्यू भी तुम्हें पसंद नहीं था?
हाँ, पर ये लोकेलिटी अच्छी थी, गुड स्कूल्स, फैसिलिटीज।
पर कबीर तो निकल गया कॉलेज अपनी लाइफ बनाने। अब अपने लिए प्लान करें। पहाड़ों में रिटायर होते हैं। इतने साल उसके लिए किया।
अब अपने लिए?
अब अपने लिए।
बच्चे जिंदगी की खोज में निकल जाएंगे, तो आज ही अपना रिटायरमेंट HDFC लाइफ के साथ प्लान कीजिए। मतलब रिटायरमेंट अपनी शर्तों पे। HDFC लाइफ, सर उठा के जियो।
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
Evolve to a drive with more power. Evolve to longer distances and quieter drives. Evolve to getting more out of very little. The new Decode and Nexon Electric from Tata Motors.
Stocks don't double overnight usually, and few ever do. Don't buy into money-spinning investment ideas from those not registered with SEBI to offer investment advice.
Tune into CNBC TV18 every day as we help you safeguard your money and invest wisely with our Investor Safety Initiative. What is money? How much money should a nation create? Who benefits from too much money? And who benefits from too little? How much should money cost? Who should allocate money? And on what values? Every week, we seek answers to these questions with the best minds. Indianomics, the show that questions the politics of economics at these times. be it global equities or personal finance.
NPS helps you channelize all your retirement savings through a single vehicle, and it's shown very good returns.
Insurance, home loans,
the more you have left to pay, the more value you can get from a refinance.
or retail investment options.
For retail investors, RBI bond are much better opportunities. This bond will keep getting repriced higher and higher.
We've got them all covered, 360 degrees. Here's the most simple and easy way to multiply your money. Make friends with money on Money, Money, Money at these times.
Just like the jungle maintains its ecological balance with the presence of a lot of animals, the stock market too has a presence of two animals. You have the bulls and the bears. The bulls take the market higher, the bears take it lower. You've had a bull run, say for instance one that started in 2020 post-COVID. There are also a lot of bear runs. We saw some in 2000 and 2007, so be mindful of that too.
Tune into CNBC TV18 every day as we help you safeguard your money and invest wisely with our Investor Safety Initiative. CNBC TV18 EBIX Studio, powered by EBIX Cash.
Heaven is like a drive that elevates you. It doesn't just take you places, but to experiences as well. It's about feeling divine and reaching the top of the world, where excellence is a privilege waiting to be claimed. The seventh heaven.
Welcome back to Big Deal, and we were discussing how to value the new age companies and will the current valuations in the IPO market really sustain. And Anurag, lifting off from where we left, Zomato, the stock price movement, what does it reflect? Is it also a stamp of approval of the kind of valuations that these companies are commanding and demanding, and or in future you see something else given your perspective on the US markets?
Yeah, so Nisha, that's a very valid question, and I think it's doing round amongst the investors. I think here is my quick take on this. If you look on the data, look at all of these companies are listing as a part of a trend where they're not diluting more than 10% of their equity. Now, which means that 90% of the equity is still locked up with the promoters, with the VC funds, and they are mandated by SEBI. They can't sell it before 1 year lock-in period. So I think that 90% is gone. Of this 10% also, 75% is reserved for mutual funds and qualified institutional investors, which basically, even if they are not logged in, there is a tacit understanding that they won't really pump and dump their stocks. What it effectively does is that there is just barely about 3 to 4% of the float of a share, which is being traded in the market. Now, with that low a float, it's very difficult that you can have a real price discovery. I understand market is a true reflection of price, but it only happens when there is no constraint on supply and demand. I don't see that constraint holding up because the supply is pretty limited. Right. We'll see the fun after 1 year when the lock-ins expire.
All right, so after the lock-ins expire and more supply of paper in the market and how the price discovery takes place, that's the real test and the litmus test for these companies, as most analysts have been also pointing out. But Safir, from your insights of the US market and the way they have performed, there have been clear winners already defined. According to you, what has been their success mantra and what defines the sustainability of their valuations?
Yeah, so to begin with, they had very good IP, which also included very good business models, which is very critical. These all translated into what Nassim Taleb called as an anti-fragile. So it became anti-fragility, and therefore, with all this ownership, they were not likely to be destroyed or distorted so easily. The second important part was what Chris Anderson spoke about in the context of blitzscaling. They put this entire business model to use in a way that they were able to scale up volumes at a very scorching pace. And most of this also happened because there was an interplay between technology and consumer.
Yes.
And the third most important reason was the fact that, they used collaborations to their advantage. So in a sense that they were not competing with a market, they were making the market a part and parcel of their entire ecosystem. And to explain this to you in a much more simple way, it's like Apple. Apple created a phone, but the success of the phone was dependent upon the success of internet. Internet's dependent upon bandwidth. The growth of the apps caused the utility of the phone to go up. The growth of social media like Instagram and Facebook and taking photographs and putting it up caused interest in the phone, and therefore they were able to advertise better, camera features and other things. So they were all ancillary rather than cutting each other.
Yes.
But where the competition starts cutting each other, then you only have one cake. And you're already valuing it as 5 cakes, but you're eating just one cake, and you'll not be left with the last piece of valuation. You'll just be left with a very sad state of affairs if you do not.
All right, so Safir, very, very good point made. We are still in a state of transformation, and there is collaboration in some pockets, but cannibalization of market in most pockets. So that transformational stage has to end for the dust to settle down. Now, many more IPOs coming up in the pipeline there, Anurag. But I want to again understand from the US point of view, is it right to also do a pure comparison with the US listed companies and therefore command the valuations here?
Yeah. So Nisha, in fact, before we do the comparisons, I think all of these startups in India, which are just kind of replicas of what's happening in US, they are doing the valuation themselves and just trying to benchmark themselves somewhere between, about 1/6 to 1/8 of what's the valuation of the similar counterparts in US. So, be it Ola, Uber, Ola is comparing with Uber, Oyo will compare with Airbnb, and we see Paytm trying to be a PayPal and all of that, right? But I think we are missing two very important points here. One is, look, it's very easy to translate the business model, but you can't really transfer the market potential and the addressable market. India is, all the numbers look very great once you talk of 1.4 billion population, but hey, the reality, and we've seen in banking and insurance and cars and every other market, is that the market really very quickly tapers off once you reach the top 15-20% of the population. So I call it like the 200 million people, that's broadly the addressable market. And that doesn't change even for these companies. Secondly, I think there are price sensitivities which people completely miss. I think look at an average order size for Zomato. It is less than $4 even today. Average order size for DoorDash, which is the, Zomato is the replica of DoorDash. Average order size there is $33. It's immensely high. Similarly, I think average Uber rides in US is about $30, $25 to $30. Average Ola ride in India is just about like $3, $4, $5, right? Average hotel stay per night for Airbnb in US is about $160. Average room rent Oyo might earn per night is less than $18, $20.
Yes.
So I think I'm just talking dollars because, these companies are seeking valuation in dollars and talking US markets, but look at these ticket size and numbers, they don't really tell that story.
Yes.
And it's not that these are in a hurry, they're not.
Yes. All right, so you made your point there, Anurag, but in the interest of time management, I'll have to give the final word to Safir. So Safir, will there be sanity anytime soon? And people will ask, what's the bottom line?
Yeah, if there are profits, then there will be sanity in valuations. But the way people are chasing, it's that FOMO, there's going to be no sanity. So somebody will get hurt. It's whenever we get hurt in the society, we learn from the fact that there's hurt, and we then have, there'll be a markdown. It happens in every bull market. There'll be one sector that will melt, and it appears that this entire frenzy will melt at some point of time.
All right. Thank you so much, gentlemen, Safir as well as Anurag. Very, very interesting discussion. But this discussion is going to continue because the spate of IPOs is going to continue. We are going to see some very big listings as well. So jury is still out on the vindication of some of these valuations in the startup space. And we have to learn a lot going forward as well. With that, it's a wrap on Big Deal. Thanks so much for tuning in.
This is Pinku Obra.